Pat, how's it going?
Trevor, what's happening, my man? It's good to be recording a pod. It's always fun.
Yeah, and this week of all weeks, it's the crypto markets are just going crazy this week. So
Yeah, up and down. You know, it was a lot of highs, but now we're it's a little bit lower today. We're recording this Friday, March 15th, so a little bit lower today than it was at its all-time high. But it sure was fun. God, everyone was excited. Man,
Yeah.
just the energy.
Yeah, as they say, we are so back. there was definitely that vibe shift. I think this week especially, it's been building, but Bitcoin hitting a new all-time high. I think we touched 73,000. So we're getting into price discovery mode, which is really interesting. So
that was quick too. Like it's worth. So the all-time high is fun to talk about, but the other thing that I think people forget about with crypto is it was not, but I believe I have to go back and look at it, but it was like something like 2 weeks ago, it was still at 50K and below. I mean, like it was not a long time ago. This was, so it was basically like it was 20 to 30K of run up over the course of less than a month. So I'll tell you exactly what it was. So February 26th, it was 51,000. So from the 26th to the 15th, we had a 70, we had a 22K run up. And that's like crypto in a nutshell. That's always how it works with these bull markets.
Yeah.
Is like it's flat, ain't nothing happening. And then just suddenly you're like overnight you have a 50K run up.
Yeah. And it could, I mean, this could just be the start, right? Like we've got the Bitcoin halving coming up, which I mean, it's, people overcomplicate it, but you're simply just reducing the supply of rewards to miners who are natural sellers, right? Bitcoin miners have to sell to keep their operations running. So you're cutting their supply in half by 50% coming up here soon. So that, I think that'll be a catalyst. Not financial advice, of course. Nothing on here is financial advice ever.
Yeah. The Bitcoin halving is coming up on April 20th. And that's where people really think that, like, there's between the ETF, because obviously the ETF has been buying a lot. So that has upward buy pressure. And then there is upward buy pressure for people getting ready for a reconfiguration of downward buy pressure, which is like once the halving happens, it'll basically most of the miners that we know, it's, I can't speak to any specifics, but obviously a lot of them are selling Bitcoin every single day. So it's a really common occurrence. Most miners are not long-term holders because they have very expensive habits. Like mining is an expensive habit. It takes a lot of energy. You are constantly having to upgrade all of your miners. So it's a very capital intensive. It's capital intensive to get started, and it's capital intensive to keep going on a day-over-day basis. Now, what's crazy, what happens with these cycles too, is that miners, when the price of Bitcoin hits like 20K, miners start to shut down because they can't be profitable running their mining rigs.
And we saw that.
We saw that a lot. We saw a lot of miners stop mining, stop working on their stuff. And then when it gets back up here, everyone flips their miners back on. So what happens is you actually do end up with this natural stable point of profitability, even though the price is so much higher. So miners never really get, because there's more people mining, so the difficulty goes up. So the odds of you winning a block is spread around more people, so you're not getting paid as much. So you really are never, miners tend not to be in a accumulation phase. They tend to always be, the probability is definitely going up right now, but they're still not making so much that they can just put Bitcoin in the bank and not worry about it. So if you have the amount that they can actually sell, then that has a very demonstrable impact on the market pressures.
Yeah. And a couple of things I want to share just that are pretty mind-blowing. So earlier this week, this is a chart of all the top assets by market cap. Bitcoin surpassed silver in market cap. We're obviously back down. But that was a historic moment. First time it's done that. And in looking at the volume I think it's really hard for people to wrap their heads around just how much Bitcoin these new spot Bitcoin ETFs hold now. But it's insane. Since
Yeah.
launch, it's 11, almost 12 billion of flows since launch. And they now, between all of the spot Bitcoin ETFs, they hold 4.23% of all Bitcoin.
Yeah.
So it's pretty crazy. And to your point of things happening quickly, uh, I thought this chart was really interesting from Zero Hedge on Twitter. He's basically is just showing, this was MicroStrategy's Bitcoin holdings. You can see, I mean, happened pretty quick. This is 2020 down here. You can't really see it. So in 4 years, I mean, they've accumulated uh, over 200,000 Bitcoin. And then you have BlackRock's line just like goes straight up, like
Yeah.
almost straight up.
And that right there, I mean,
So
that's buy pressure right there. Like if you're looking for a reason why from February 25th things went up, this is it right there. I mean, just you can't buy that much Bitcoin. You can't put that much pressure on the market without moving the market itself, which is then it's the stuff is always kind of conflicted because then the existence of the ETF is moving the market, which then moves the market more. But it's people getting into the market that's moving it, but it is really pretty fascinating. We haven't had this much buy pressure in a long time.
yeah, yeah. Needless to say, it'll be a very interesting year. It already has been, and we're only in March, and then we're gonna get the halvening coming up here. I also thought this was interesting. If you want to, if you ask why, like why do ETFs want to hold this? I mean, one, it's because they get fees
Yeah, there's
for
money in the bank, right?
yeah,
Free money.
yeah. But also, I mean, you can't argue with the track record of Bitcoin, right? Um, anyway, I think the Bitcoin news was super exciting. Um, the other thing that's on the opposite end of the spectrum, uh, not so much in the institutional realm, more on like the crypto, like crypto is gambling, no use case side of things. Meme coins are running super hot right now.
Everyone's talking about meme coins. I feel like people that miss meme coins in the 2017 era, ICO era, are just like head first diving into meme coins this time. Folks, everyone is talking about them.
Yeah, yeah.
Yeah.
It's and this is pretty funny. And I think maybe it tells you about where we're at in the cycle. But dog with hat has been really a top performing meme coin this cycle. It's a it's a Shiba Inu with a beanie on its head. You can go look it up. Uh, I think it touched like 3 billion market cap this week, which is just insane. But they're raising money to put the their dog with hat on the Las Vegas Sphere. Um,
Is that, by
so
the way, is that a number? Is that how much it costs to advertise on the Sphere at 650K? Is that like
I don't
based on actual
know.
real numbers? Is this
I
just
don't
like, are they
know.
just rugging straight up? Like,
I wouldn't be surprised if that was the actual number. Um, let's see if we can find it really fast.
so what? While Trevor's looking that up, I will say, what to think about meme coins is a couple of things here. When I talk about meme coins,
450,000 a day. Yeah.
how much?
450,000 a day or 650,000 per week. So they're probably going for
1 week of on
1 week
the
of meme coin.
So the way to think about meme coins is they look at every meme coin. Like this is a really good example. Like this meme coin does not have a company behind it, does not have a product behind it, and this isn't meant to be mean to these guys. Like good for them with what they've done here. But like these kind of meme coins are all going to zero. Like they will inevitably go to zero. That's nothing against them or anything like that. That's just sort of the hard truth of it. And so the point between when they launch the meme coin, when it hits its high and it goes to zero, it's essentially this kind of complex like game theory exploration between you and all the other folks that are trading in meme coins. And so it's this, you're not investing in a company. You're not getting equity by buying one of these tokens. Most tokens, you're not getting anything that even remotely resembles equity. The best tokens that are out there are not ones that give you equity. They're ones that have constructed some sort of tokenomics where there's going to be, again, we're talking a lot about buy side pressure, but the best ones that are out there are where there's a buy side pressure that will keep the price of the token high, so that as demand for the token goes up, the price will go up. A good example of that would be the Get token, which is a token that's there. It's a company that's working on building a ticketing platform. And so their ticketing platform, like in order to use their ticketing platform, you have to buy the Get token and then burn it. And so essentially, like, the idea is that if lots of people start using their ticketing platform, the price will go up and people who've invested in the coin will go up. That's not what most of these meme coins are. Like, most of these meme coins have no underlying use case. They have no underlying value. It is purely a gambling experiment with you and 10,000 of your best friends on Uniswap or whatever it is. So keep that in mind. It can be fun, but like, treat this as though this is playing poker with your buddies, because that's essentially what this is. Essentially like a version of liar's poker, of like, how high can it go before the floor falls out.
Yeah, I think there's definitely some cons. I mean, we've seen there's negative things that happen in every bull market. Last bull market, it was FTX, and we've had just like these crazy like DeFi yield farming that turned out to be scams. And so it is unfortunate that a lot of these will end up being scams and rug pulls. I think there are some pros in that it does onboard new users to crypto, probably not in the best way. But two, I think the blockchains that these coins are on are going to benefit, like Solana and Base, and you see some of the layer twos. So anyway, I don't need to talk about that anymore.
It's a tough one though, because it's kind of a sugar high. So the blockchains benefit because people are spending fees and doing all this kind of stuff on the blockchain. So that helps the blockchain, it helps the metrics for the blockchain. So if you're looking at the metrics for ETH or whatever blockchain, Gnosis, and you see it going up, you're like, oh my God, this is amazing. But like, they're not real use cases. These aren't use cases where it's not NFT tickets being sold or trading or like, all these other use cases that are real. It is this very artificial. It's basically like, it's like if you have a blockchain whose entire use case was online gambling, which is fine, but there's not going to be there's not going to be 10 winners in the online gambling blockchain space. There's going to be one blockchain that is domiciled somewhere shady that will win for online gambling, and then everyone else will like slowly kind of move off of that. So
yeah, we'll see how this one plays out for sure. I thought this was interesting. Retail isn't here yet. Yes, they are. They just aren't in Bitcoin and ETH. And you just see the interest in meme coins skyrocketing on Google search.
And of course, story, that is changing as folks are obviously as folks are getting into ETFs. That's where retail is getting into it. So, which is good.
Yeah, we're on both ends of the spectrum here for sure. Going back to ETF news, so there's been a lot of talk about and speculation around the spot ETH ETFs. And apparently Coinbase met with the SEC. So everyone got all excited thinking, oh, this is really bullish. It means they're probably going to approve the spot Ethereum ETF. And ultimately, it seems like it may not be as bullish as everyone thinks. All of the big ETF analysts, like Eric Balkunas, he's been covering the spot Bitcoin ETFs, has said by this point, the SEC had issued comments on the spot Bitcoin ETF. So it's not a good sign that they haven't done that for ETH yet.
It's hard to imagine though that this is not so because of the way that Bitcoin was basically classified as a commodity early on, it's super hard to imagine this doesn't also get the same treatment. The one caveat, of course, was how Bitcoin, like the biggest difference between Bitcoin and ETH from a regulatory perspective was how it was launched. Like ETH did go through kind of essentially an ICO where you could log in and buy ETH for 50 cents. I'm sure they did not do any of the KYC or any of those types of things. So, there is a structural difference to how the two tokens were launched. But on the other side of that, there's not been a structural. They are both treated as commodities from the U.S. perspective here. So it's hard to imagine that it's not a quick follow on, but who really knows? It is interesting.
Yeah, and Coinbase made the argument in this meeting that there's a strong correlation between the spot ETFs and the futures. So, and basically you have Eric saying that it isn't as strong here versus the Bitcoin ETF, which is a factor for approval. James Seyfarth, he's another prominent ETF analyst. He's saying no comment so far, isn't a good look. And then you've got Jake Chervinsky, who is a crypto lawyer, basically says, like, I'd love to believe that these are going to get approved, but he lays out all these reasons why he's not super bullish on it. That they dislike crypto as a concept.
Yeah.
Just
that's for damn sure.
Yeah. Yeah. They're trying their darndest to kill it in any way that they can. So I won't read through this whole thing, but there's some good arguments in here. I think, like he just said, it's not an insane basis for denial, talking about the spot futures correlation. They could come up with new grounds for denial that weren't tested by Grayscale in court. They're willing to take a litigation risk in court.
Yeah, just wasting more money on litigation on this, which is just insane for absolutely no benefit to anybody in the entire world.
Totally. All that being said, James Seyfarth, who I mentioned earlier, gives it a 60% chance of approval in May. So it's a non-zero chance of approval.
Non-zero chance. There we go.
Yep.
And actually, it's a pretty good chance that 60% is pretty high, actually. But I don't know. People were saying 60% for the Bitcoin ETF for years. And years and years and years. So I would never. I think I would never take anyone's percentage-based estimation
totally
of anything having to do with the ETFs.
You've got a few people saying, like, because BlackRock is wanting this, and you've got all these super powerful, wealthy investment managers pushing for this, that it's gonna get approved no matter what, and that just isn't necessarily the case. I think it definitely means something, right? That being said, I read something this week that said it would essentially be the most controversial, nuanced approval of any ETF BlackRock is filed for. So it's not as straightforward as BlackRock wants it, therefore they will get it. But we'll see. We'll see if that happens this year. One thing did happen with Ethereum that was a huge success, and that is the Dankun upgrade. And so, Pat, maybe you can tell us, like, what is the Dankun upgrade? Why is it a big deal? What does it mean for the industry?
So it's the Dankun upgrade. It was a big upgrade. It was basically everyone who was running one of the ETH validator nodes had to update their software. It increased the size of the ETH blockchain by a couple hundred gigs overnight, basically, or very, very quickly is sort of the expectation. So, up from like 700 gigs to about a terabyte for the blockchain if you're running one of the nodes. The high level is that it was a upgrade specifically and almost entirely focused on L2s, which is kind of crazy to think about. Like, ETH has done a great job embracing L2s in a way that, like, Bitcoin kind of has as well, but people, they just think about this very, very differently. Like ETH has always tried to be a platform for other things to be built on top of, and it was always part of the vision that they would need to adapt for L2s. So what was happening over the last few months is that L2 fees were starting to go up, and so we all think of L2s as being the cheapest place to do stuff. But as fees start to sneak to 50 cents, $1, $5 on some of the chains, you obviously, the benefit of the L2 starts to kind of go down.
Mm-hmm.
So there was a lot of pressure to figure out a better way to, and without getting too technical here, this has to do with how they store transaction data that is coming from a different source. So what happens is that, like, you think about how one of the optimistic transactions, like Optimism or Arbitrum, how they work is they basically you execute this action on the L2. They will reflect that action back on the L1 a week later, and they roll it all up in a way that kind of assumes it's going to pass through their security checks and all that kind of stuff. That's why they call it optimistic.
Mm-hmm.
But what's happened is it takes a lot of, in order to do these rollups, it takes a lot of storage space on the blockchain. And it's not very efficient because it really was never designed for taking 100 transactions and then like optimizing those and then putting them on a different blockchain. The original place where they store this data was really designed for, I'm going to send you some ERC20 tokens. And so what I'm putting in there is this data that says like Pat's address to Trevor's address, like 100 USDC. And so it's a new way of storing large amounts of data of kind of this roll up or of this execution level data on the blockchain. That's a lot more efficient. It goes to a different place and it gets costed differently. And so that allows them to basically lower their fees. And we're seeing fees in the penny range. Or that's where we kind of think it's going to end. I don't know if we actually are seeing that yet, but folks all think we're going to start to see fees drop to a penny or less on a lot of the L2s because of this upgrade. So it's just a way of scaling. It's how ETH has always leaned into scaling their blockchain, and it's really exciting. And it was nerve-wracking because a lot of stuff can always go wrong during these big updates. But things went off pretty much without a hitch that we noticed.
Yeah, that's huge. And a personal anecdote from this week as to like why this matters, why reducing fees on layer twos and just layer twos in general matter, is I discovered that I had ETH from like an old wallet that is staked ETH, Lido staked ETH that I was providing it to like a liquidity pool. It was like the equivalent of finding $100 in your like
it's always
in your ski jacket.
It's always fun. Finding an old wallet's like the best feeling in the entire world.
Yeah. So I get all excited
feeling.
And I'm like, oh, I kind of want to withdraw this from the liquidity pool and put it somewhere else. And I go to do that, and the gas fees were going to be like, it was like $500. And so I was like, nope, you live here now. This is yours now. This is, you stay here. So, and that's why we've seen like this massive increase in total value locked on layer twos. I mean, if you look here, this is going back to 2020. We're here 2024, and there's 35.77 billion on layer twos. So, the fact that we're, upgrading, this was the second biggest upgrade since the merge. And now, from what we can tell, it seems to be working because like Argent, which is a wallet, like a DeFi wallet, said 4 cents for an in-app swap on Argent X. A couple of days ago, it was $6.82. You have Optimism, which you were mentioning, Pat. So you can see this chart of their median gas fees, still pretty low compared to layer one, like right around the $1 mark. And since Dankun, they're, I mean, zero or close to zero.
Does that go below zero? They pay you to use their L2 there.
I don't know what that is.
Shady logarithmic charts. Always hard questions there.
Yeah, that's why we don't zoom in on the charts.
Never zoom in.
So that was huge, and I think as far as what it means for the industry, I think you see more people flocking to layer twos, and more enterprises as well. Um, we see a lot of enterprises doing more on layer twos just because everything you do on a blockchain requires transaction fees, gas fees. So, um, of course, you're going to go to the optimisms and the arbitrums, and we're seeing all sorts of new layer twos emerge. So, super exciting. Uh, One thing that happened this week, moving into like more of the regulation side of things, uh, the SEC basically filed an enforcement action against Shapeshift, which is one of the longest standing crypto exchanges.
They were the original decentralized exchange. It was a little
Mhm.
bit different, but like Shapeshift. I mean, Eric's been around in crypto since 2011 or something like that. Shapeshift
Yeah,
was a really early way that you would send them some. It was an exchange, but it was all like you would send them some crypto and they would send you back a different crypto, and it was totally no KYC, no AML, anything like that. It was really pushing the boundaries of like, so if you step away from the regulatory side, it was a really cool idea. It was this
yeah,
idea of like just this incredibly streamlined experience of like, I send you this, you send it back to me, you take a little spread, we all are happy. But of course, that it was also an unregistered broker, which doesn't make anybody happy. So
yeah. And what's really interesting is the SEC settled for 275K, which it's kind of like, what's the point? And I mean, to me, really, like that's literally just to send a message. It's a slap on the wrist. It's to say we don't like you. um, and I think I read in here that Shapeshift isn't even really like operating anymore.
they went through this process of trying to become a full DAO. Now I don't know. I mean, it's real. Like I had a chance to talk with Eric about this when I was at a conference a couple of years ago, and he's a very big believer in DAOs. Like he
Yeah.
really thinks that like you turn this into a DAO, there's no one to go after, there's no regulatory issues, all that kind of stuff. So they basically dissolve Shapeshift entirely into a DAO, and moved it all to be decentralized. But of course, that's not. I don't think that's not the stance that the SEC has taken, for instance.
Hmm.
So like obviously somebody obviously got was on the other side of this 250K fine, and they tracked him down. So it's really like he's doing some really interesting stuff in terms of really pushing the boundaries on like what DAOs can do, what they can be defensive about, what's going to hold up in courts. So I'm
Hmm.
excited to watch all that happening. But yeah, you're absolutely right. Like this as an incorporated entity that would be on the other side of this subpoena and then this judgment, I don't know if they really exist anymore.
Yeah. Yeah. It is really interesting. And of course, you had a dissenting opinion from Hester Pierce and Mark Uyeda, which I feel like you just come to expect now. Like
Yeah.
anytime Gary does something, just a gold response. So go and read that. We can include that in the notes. But very entertaining. I want to make sure we hit on this, especially because it's very specific to crypto tax. But CNBC published an article, and the headline was "Tax Bros Brace for Tidal Wave of Crypto Tax Scrutiny from the IRS: What Investors Need to Know." And this isn't a huge surprise to anyone. Like we all know, the IRS like knows crypto exists. They want their cut. Totally makes sense. Um, but the big thing that this article refers to is the IRS recently hired two private sector employees to come and consult them on enforcement. Essentially, just help them to figure out like, hey, what's the best way to tax digital assets? And then the other thing is, I think it was
Well,
just
and
last
how do
week.
you do enforcement? I mean, that's the issue. Of the
Yeah.
IRS is always going to be how like you can set up all the regulation in the world. Crypto is incredibly hard to do enforcement on. So you really are relying on people to be very honest. And so then a lot of the work that goes into that is then figuring out how are they going to do enforcement? What does an action look like? What does an audit look like? I don't even think that they know the audit process here particularly well either. I mean, it is, discovering other people's wallets and all this, working through all that kind of stuff. The IRS has a lot to learn about how to work with crypto. And so bringing in experts is good, for sure. I don't know if it solves all the problems, but it's good.
Yeah, and I think the timing here is very relevant. It's not a coincidence that they're hiring these experts right after, the broker regs proposals, and they got all the more comments than any proposed regulation has received at the IRS. And they're probably realizing, like, okay, you guys have some good points. Like, this is going to be very difficult to enforce, with like 1099 DA reporting. So I think it's a good thing that they're talking to people that know the industry.
Yeah. Though there's been this, where these folks come from, are one of the players that, there's some of the folks that do tax in the crypto space. This is not like throwing shade or anything, but they've taken a little bit of a book from Intuit. So Intuit's playbook, which is to advocate for higher levels of complexity and basically things that will make software more make more money, I guess. Like for us, it's one of the reasons at Bitwave that we never really comment on regulation. Like I will personally comment sometimes, but we as Bitwave will never take a stance on regulation because honestly, it's way too we're way too conflicted on it because in some ways, like you don't want to have someone like us saying that regulation is good or bad because you don't know what our interest is. We might want there to be more regulation. I don't, but like as a company, more regulation probably means more software sold. But the other side is like so the folks, two of these folks, one of these guys came from a company that's kind of known for pushing for higher levels of regulatory complexity. So that's something that does concern me a little bit. And I never like revolving doors between government and industry on this stuff. Like I like there to be government folks and I like there to be industry folks. And that's not to be mean to the government folks, but like you don't want there to be a revolving door because again, it just means that your incentives are perhaps not as aligned as they may seem.
Yeah, like I think in theory it would be great if someone from the industry that really gets this, who is like either neutral or is an advocate for less regulation, goes and says, "Hey, here's how to do this." But if they're going to the IRS and they're like, "Yeah, I'd love to be a consultant," like chances are their motives are more geared, they're more biased towards more regulation. So we'll see how that.
And that's why we also like at Bitwave, we don't tend to take we don't tend to comment on a lot of these regulations. We don't tend to do lobbying. You'd be surprised how many folks in the space that are in our industry actually do lobbying, which is again, it's just a really you're just kind of conflicted. So I worry about this a little bit, which is like it's not as simple as this all seems. You want more industry people in the government talking to them, but I'm not sure we really want them. I'm not sure we want the revolving door like this.
Yeah, I feel you. And one last thing on the sort of tax accounting news front is the White House came out with their proposed budget for 2025, and in that budget there were two proposals directly related to digital asset tax. One of them was a 30% tax on energy that Bitcoin miners use.
And this one's going to be tough. This is like a real tough one to get through just because it's such a stupid, it's a really dumb tax to actually tax like particular uses of energy. I mean, it's just not the way the world should really work that you don't agree with or whatever it is. Yeah.
Yeah. I mean, it's ridiculous here you were just saying we don't comment on policy.
Yeah. Yeah, we don't comment on
policy.
Let
me rephrase that. This would obviously not be very beneficial for especially Bitcoin miners.
And this is I'm not commenting on crypto policy. I'm commenting on general legal policy. Like you should never we shouldn't have rules that govern how energy is used, because that is
Mm-hmm.
honestly, it's for what it's worth, it probably is a free speech issue to begin with. Like, how you are using energy
Mm-hmm.
is not really the government's business. That's not me being
Sure.
a crazy libertarian. That's just like literally,
Yeah.
it's that means that the government can make rules about what they don't agree with. So they don't agree with you hosting a website, so they could put a 10 million% tax on energy used to host websites that they don't agree with. I mean,
Yeah.
there's real substantive issues with actually like regulating through this mechanism.
Yeah. Which is really unfortunate because, I mean, even if you're a miner that is using like geothermal energy or like capturing energy that would otherwise just be lost into the
Which is where
ether.
every miner has to go. Like, energy,
Yeah.
the benefit for miners is finding the cheapest energy available. And so that's the other part
Hmm.
about this. This ends up being like a bizarrely regressive tax, because it means
Hmm.
that people that are mining not industrially will get taxed the highest, whereas folks that are serious about this, that are going for zero like cost kilowatt hours, or point 0.01 penny, whatever it is, because they're using renewables or whatever, are the ones that would not actually be hit that much, because there's not a big there's
Yeah.
not a lot of money there.
Yeah. And I think something I take comfort in, like this was in the proposal for last year's budget, never made it past Congress. Um, I mean, it sucks that we like that we even have to talk about Congress and legislation when it comes to crypto. But we'll see what happens with this one, as we do with so many other things. I think the other big part of this is a proposal to close the wash sale rules. So most people are probably familiar with wash sales that are listening to this, but basically, if you buy a stock, there are rules that say you can't turn around, sell that stock at a loss, recognize the loss, and then buy the same stock for 30 days. And crypto doesn't have an explicit rule. I've talked to a lot of different tax professionals on this and like what they recommend. A lot of them are pretty conservative, saying like, no, like this is a loophole that's going to get closed. So
Well, I mean, a lot of people will say that this is a loophole that doesn't exist. That this is
yeah.
like the government hasn't gone after folks at this point. But like, if you look at like Stoner Cats, because Stoner Cats was the customers are, and I loved them, and the government went after them super hard for an unregulated security in a way that was just
Mm,
absolutely. They had a great use case for NFTs, which was access to watch a TV show. I mean, there is no thing that I think is that is a cleaner,
yeah.
not an actual
Yeah.
security. So what's going to happen for me is so the rules for wash trading as they are written, depending on who you ask, they very well might cover wash trading today. And so what will
Yeah.
happen is they will find someone like, I don't know who, Vitalik or whatever, and they will go hard after them. Uh, and that's going to be really terrible. But if they want to make it explicit, what I heard about this was that basically closing the wash trading loophole, if that's what we're going to call it, is it's worth about $10 billion in offsets. So if
Yeah.
there's any point over the next like couple years where the government wants to do like a net neutral bill in the U.S. and it costs $10 billion, the wash trading rule is just sitting there. So like everyone should
Yeah.
be ready for this to go away.
This
It is,
it says
yeah.
right here, they said in the budget these taxes could generate 10 billion next year if taken up. And I think it was something like 40 billion over the next 42 billion uh over the next decade.
Yeah.
So yeah, they're obviously incentivized to
Very
capture
this is
that.
an easy this is such an easy win for like Congress to do, because
Yeah.
it lets them fund with something they want to fund with impacting only a few of the crypto bros out there. So yeah, it's a tough one.
Yeah. We'll see. Well, that's all I had for this week. It was fun chatting about this, Pat, and I'm
Yeah,
sure we'll have a whole slew of news stories for the next episode. Things tend to move fast, so it
always a
was
good
fun.
time. Yeah, thanks so
All
much,
right.
Trevor. Good stuff. Thanks so much, everybody. Have a wonderful
Yep.
weekend here.
Thanks for tuning in, guys.